Good morning, VIP Discord. It is Monday, the 2nd of February, 2026. I just want to run you through this example that just popped up on my chart. Obviously, no one was up at this hour of the morning. This was market open, but I just want to run you through how, when we do that top-down analysis, this is exactly how it works, right? So yesterday we drew in this hourly low. We had that double bottom there from Friday. We come up and the market ended here. Let's just put the demonstrator, there we go. The market ends here, right? We gap down during open. So we're gonna gap from this point down to this point, and it's mitigated right there. There we go. So that's the opening gap, okay? So we're not interested in taking any trades that when we see this from that zone that we put in yesterday, the hourly low that's just located here, we're not interested in trading right now, right? We want price to pull up. We want it to fill that gap as it does. And then you can see we've got some reversal action coming at Asian Open. Now, as I said, Asian Open for me at my time, that is at 2 a.m. in the morning. I like money, but I don't like money that much. So what I'm waiting for in this scenario is we're waiting for this 1 hour low to be breached again. And as you can see, institutional money steps in, bang, 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 right? Comes down, comes back up, and that's where you get your retest, okay? So if you, hypothetically, if this was in a London session or in a session when you're awake, you could take your entry here, right? There's a little fair value gap, obviously the inversion, but that puts a pretty decent stop on you, okay? So you don't have to enter in the box, and that's what I see with a lot of you guys is you're rushing to get into trades, right? There's the opportunity rolls out. You've got to remember that, right? It's not a one candle opportunity. There's opportunities within the one opportunity. So we come in and we test and reject that 1 hour low. Okay, so we've dropped down, so we've gone from dealing with this range here between this hourly and this one here. There we go. Oh, hold on. Right, so that was our range, right? We're up here in that range, right? Messing around on Friday, that was our range, but now we've dropped down and we're in a different range now. So now we're in between this area here, right? This is our tradable range now. So if we come back up, we'll look for rejection to come back down to the bottom. Okay, so that's the new range that we're trading in. We've stepped down. But as I said, there's multiple ways that you can get into these trades, right? So you don't have to get the rejection right here in the zone, all right? A sensible person would just wait, and they would have got this breaker structure, right? You got a fair value gap there as well that overlaps, which is great. There's a 1 minute rather fair value gap. We get up and test it. Now, again, I said this kind of is the theme of the weekend is market logic, right? Market logic says that when you see a doji, that is your signal of a reversal, okay? So we would have entered when the next candle opened, so right here, and we would put our stop at the high of that candle, and we would target previous liquidity. Now, how do we find previous liquidity? Yeah, cool. There's a point here, absolutely, right? But we want to go to a different time frame, a higher time frame, and we want to look and see, okay, cool. Where's our range now, right? So price is, we're down here on price, and we want to look left. If we look left, look at what we see. We've got a really nice expansive leg that hasn't been mitigated. So that would be our liquidity target. Put a ray on the bottom of that. That blue ray is going to identify our liquidity bottom. and that would be your target. All right, so let's drop back to the 1 minute. I know this might be a bit much early in the morning on a Monday, but this is how we get it. This is exactly how we do it, guys. We've got to do it. You got to get immersed and get amongst it, right? So that would be our liquidity target from the 15-minute expansion. When we look left, we've got our entry. We know that we're in the top of a zone because we've marked that out on a higher time frame. We know that we're potentially going all the way to the bottom of that zone and potentially bouncing back up. I'm about to sneeze. Oh, excuse me. All right, we're clear. We know that we're potentially going all the way to this. This is our range, so this is our lows. This is our highs of that range. We know that we've bounced off of the upper of that range and we're heading to the bottom of that range. So this is all working in building our trade out, right? We've got our liquidity target from an expansion that happened previously. We went up to the 15-minute to find that point. We've got our break of structure, our 1 minute fair value gap. We've got a test. We've also got that reversal candle, which is a doji. You either get a doji, a shooting star, a hammer. A hammer's a good one. And then we start peeling off to the downside, right? Now, if we have a look at where that liquidity lies, then look what happens. We double bottom and we bounce, right? It's not by chance, ladies and gentlemen, that these liquidity points continually play out and you get that severe rejection from those areas. So that little trade there would have been 1 to 7.23%. You risked 1% of your account and you returned 7.23% in return for just using a bit of logic and a little bit of market know-how. Anyway, that is just a quick update for Monday. I just wanted to run you through this. As soon as I jumped on the charts, I saw this and I was like, wow, that's a really, really nice little trade. Break of structure plus fair value gap wins every time. Don't rush your entries, take your time. As I said, you don't have to get in on the rejection of that zone. Just wait for structure to break. It's a better confirmation, right? And yeah, there you go.